Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. Let me display the PowerPoint presentation. Asian session live market analysis on July 26 between 5 and 5:30 GMT. So we'll be tracking the market using the live market code page. I'll give the link for the same. Okay, I have given it in the hotcom window. You can open it in a browser. Then I will also focus the camera over that of the live market code page. Let us review the market now. Euro is currently trading around 1.4478 or 1.4480 level. 1.4358 is the low. That was the Friday close level. And now it is trading around closer to that of the high, 1.4485. 103 pips positive net change is seen. And in the case of GBP, it is trading around 1.6345, 1.6349, 1.6267 is the low, 1.6346 is the high, 71 pips positive net change is seen. So suddenly around 3 GMT, you know that the market went up and Euro gained quickly in a matter of about 15 minutes, about 100 pips. And afterwards, it is holding high, not breached the high from that time onwards, nearly about 2 hours. Now we know that what could be the reason. So let us analyze it after going through the other currencies. USD-Yen is trading around 78.05, 78.08, 77.91. Below that of the psychological level 78, it has gone down and come up and currently trading around 78.05, 78.68 is the low, high, and 21 pips negative net change is seen. And in the case of USD CHF, it has gone to that extreme level 0.8011, 0.8014 or the current level 0.8007 is the low. 0.8068 is the high, 47 pips negative net change is seen. Euro has made more than 100 pips positive net change when all others are showing relatively lesser net change from that of yesterday's close. Coming to that of the commodity pairs, USD CAD is trading around 0.9434, 0.9438, 9437 is the low, 9473 is the high. 35 pips negative net change is seen. In the case of Australian dollar, it has gained about 73 pips. 1.0916, 1.0919 are the current levels. 1.0822 is the low. 1.0918 is the high. And you find that all the currencies are showing the USD weakening move to start with. And we are in the last week of the month from 25th to 29th. And we know that during that of the last week of the month, the volatility is expected to increase, and that is mainly to hit the option barriers, and thereby there could be enormous earning by hitting the options. So currently you find that Euro is trading around 1.4482. Yesterday I have placed it on record in the blog that they are not breached the low. The low what they are set during that of the European session in the case of Euro, and they are expected to gain the levels. And afterwards, as per the algorithm, I was expecting them to open lower and slide, but they made the volatile move and gained the level. So this is how you come across suddenly such volatile moves come into that of the market. And this sort of volatile moves are mainly with a purpose and which we may not be aware of, especially during that of the month end. So this is mainly, now we come to know that there was an option barrier around 4470 and they just breached that option barrier and they are holding around that particular level. And in the case of GBP, they are not gained that much level. So you find that in the case of Euro, the volume is more and more of options were written, so they have just handled it effectively. So what could be the possible move we need to understand? Because before taking into consideration the trading ideas, we need to first of all understand what they are trying to do. Thereby, we will be able to decide what could be the possible trade. Now at the highest level, 1.4485, after gaining the level around 3:15 GMT, they stopped cutting the high. So at this level, it is risky to take a buy position because it's near that of the high. But this is the initial high. But at the same time, you might be afraid of taking a sell position. So in such a scenario, we need to have some sort of confirmation that whether we can go in for a buy and sell trade or a sell and buy trade. So there comes our skill set. And obviously we try to take the positions in order to make profit. At the same time, the market can also go against us. That is a possibility which prevails in the market. So our reading has to be that they have formed the high, or have they breached the high? For in our observation of 30 minutes, if they are not breached the high, that means they have done that objective of hitting the option barrier, and they are holding now to create the traders to take a buy and sell trade because it is holding very strong. And statistically, if we estimate that it has breached most of the resistance, and probably the next possible level could be 45.70. So that is how we will be able to estimate in the statistical calculations. I'm not going into the details of it because others have already done this analysis and displayed it at FX Street. Probably you can go through that and understand what could be the next resistance level. So how exactly we are going to handle in a situation? So whatever we anticipate, there is no guarantee that the market needs to respect it. At the same time, it may appear the market continue to support some sort of analysis at a given time. So if I say that market will go up, then if that analysis comes through, then probably I can say that market has moved according to my estimate. And in case if I say that the market is expected to come down, and when the market goes up, and I can say that I had done a wrong analysis, and so kindly get it stopped out. So that is one possibility. But I wanted to go one step further in order to give guidance to that of the traders. What is that? In case if the market goes against, then how exactly in the existing position, instead of stopping out, we can try to earn money? Ultimately, we are not having any sentimental attachment to that of any currency pair. We look into that of the market mainly to take the trading perspectives. So in the trading perspective, we can go wrong. Our analysis can go wrong. But ultimately, we need to see how exactly we are able to come out with that net profit. That should be our objective. Now they just breached the high in the case of euro by 1 pip. So we'll also watch that. So in that scenario, we have to necessarily focus more on this trading strategy. Whatever be the type of analysis we do, there is a chance it can go right or it can go wrong. Both the possibilities prevail as far as our decisions are concerned because our resources are limited and probably we won't be knowing when exactly a rumor is going to be out or when exactly a sudden breakout news or a downgrade or an upgrade news is going to be released. So in such an eventuality, we have to necessarily see that our risk is limited in trading. So we cannot take undue risk. We have to necessarily keep stop to limit the risk. And once a position makes profit, we have to keep stop at entry. This is a predominant thing a trader has to consider before taking positions. And some of the traders, they feel that they got adequate equity, so we can trade without a hedging or without a stop. When the market goes against them, then they find that equity gets eroded and later on expect the market to come in that way immediately. That may not happen. They will be testing the patience. So instead, if you use the hedging, the advantage is if the market goes up, okay, you have got a buy position as a hedging and try to maximize the profit in the buy position. The market comes down, then you try to book profit in that of the sell position. So that way, either way perspectives will prevail if we use hedging, provided the hedging facility is available in the trading platform. Besides, we have to fine-tune our trading or fine-tune our market reading from time to time, and we have to perceive it correctly. And only then our earning potency will increase. So for that, what we do, first of all, I'll go back to the PowerPoint presentation. We use the forecast as a guiding factor. And this forecast has got its own limitations. Whatever be the type of statistical analysis I put in, it will be having its own limitations because it is next to impossible to predict the future by anybody for that matter. So it can go wrong, but we try to do it with a good objective or good understanding that most likely the market is to follow that, or market might show such moves. So ultimately what we understand is a move is either an upward move or a downward move. There are only two possible moves in the market, and in case if we expect an upward move and suddenly there is a drop, it is difficult to find out what could be the causal factor for that, because there are so many factors. All the traders have turned long in Europe, for example, even though the US debt crisis is having a phenomenal impact, probably Euro may not go because all are holding long positions and somebody wants the market to go up. But who is that somebody who is going to rise the market like a fool, or just to rise it because when all others are holding long positions? So invariably you find such surprises happen in the market. So when there is a surprise possibility or a potency in the market, we have to see that we don't become stunned once a surprise is shown in the market. So for that, I insist upon the trading strategy. So step by step, we have to take into consideration all the factors. So the forecast is one of the guiding factors. So during that of the Japanese session, it is expected to make a volatile move and slide towards close. This is what the forecast says. And there can be a slide or a further firming up. The possibility is there, it can go wrong. And there is no hard and fast rule that it has to come down because the forecast says it has to come down. The market is a very big entity and we cannot just like that control it as an individual. But the big players have got the mechanisms to control it. So it is not that they are trying to move the market against me, because by that they don't gain anything and they will be wasting the time making the entire global market according to the forecast. But making it against also, they don't gain anything. And I am a speck in the ocean and I am nowhere for them. But why it makes the move? Because if they find if there is an option barrier on the higher side, if they find that there are a lot of stops on the higher side, then they push the market up and try to earn their money. So all the moves in the market are mainly money earning process of that of the players and nothing to do with that of anybody's analysis. So this we have to keep it in mind. So these analyses are nothing but the guiding factors for us. Ultimately, the trading strategy alone can help us in order to earn from that of the market. You know that statistics says that nearly about 30% of the traders alone earn consistently from that of the market. The rest of the traders lose the money. Why they lose the money? Because they are not taken the plan properly, the trading plan. That is, decision making with regard to taking a sell or a buy or an impulsive trading, quickly entering to the market without judging it properly, And also the over trading, taking too many positions at a given time or continue to average the positions and very frequent intervals, about 10-20 pips or 30 pips intervals. Then when the market moves about 100 to 200 pips away from us, then there could be a margin fear. So we have to understand that we are causal factor for all our fears, and the market is not really the causal factor. The market is known to make volatile moves, up and down moves alternatively. We try to read it. It can go wrong. So what are the trading strategies we are trying to use so that we are not under the grip of the market? We control our trades. So if we want to really go in for that, the trading strategy is part of our trading decisions. So let us take step by step the forecast, what it says. Volatile moves and slide during that of the Japanese session. Then European session swing and slide, and US session swing and slide. So it might look very different from that of the current market condition, because market is showing extreme USD weakening move. But the forecast says that there could be a sudden reversal from that of the market. So we take the forecast as a guiding factor and we do the market reading. For the market reading, we need to have the initial lows and the highs. So because the players also used only those initial lows and the highs in order to make the decisive moves, and whether there are stops above that of the high or stops below that of the low, and accordingly they are trying to make the moves and try to earn money. So for that, we need to have the initial lows and the highs, which are formed between 230 and 330. In some pairs, around 230, 240 time frame, the lows and the highs would have been formed. And some pairs around 350 and 320, because they may not be able to handle all the pairs simultaneously. So they have to take two pairs at a time and try to set the initial lows and the highs. And once they set the initial lows and the highs for the day, and they use it as a reference level, and these reference level help them to easily identify whether the traders are holding sell positions or buy positions. Another important aspect with regard to the market reading is the quick moves or false moves. So whenever they quickly gain the level, okay, their objective is to book profit before any breakout news of their buy positions. So whenever there is a quick drop, and yesterday you noticed that during that of the US session there was a very quick drop, and that particular drop, everybody was anticipating that there could be some challenging news coming out of US with regard to quantitative easing. So in the quantitative easing process, many were thinking that there is a great potential for it euro to go up, but whereas they made a drop because lot many traders right from that of the morning, they have been holding the long positions. Yesterday, if you notice it, they showed 1.4416 and subsequently the low 1.4356, and that is closer to that of Friday close. So when they are just holding on that particular range, people were freely buying the position because anyhow US debt crisis is going to bring in a severe impact and the market has to go up. So all were freely taking the buy. Then they made about 30-40 pips drop from there, and the next gain, everybody was telling that go for a sell when they are gaining it. Because I have been observing yesterday in the chat also, many of them were of the opinion a sell and buy trade could be a good proposition. But what they had done, towards close they gained to 1.44 as anticipated by that of the forecast, what I had given it, and that is a derived forecast. So after the gain, they opened it around the same level. Today, you know that 35.58 is the low. From there, quickly they went up to 44, and then in a matter of about 15 minutes, they gained very quickly about 40 to 45 pips from their 44-47 level that they have been holding it from the start of the session. So after gaining about 40 pips and now they are slowly cutting the high, 44.85 was the initial low set around 3:30 GMT, initial high, and now they have formed 44.88. So whenever they just cut it by pip, we understand it is just to give the impression to that of the traders the market wanted to go up. So let us judge and analyze whether this particular understanding is correct or not. Then in the case of GBP, 62.69 like yesterday and 63.43 like yesterday, they set the high and the low in a range bound. Now they cut the high in the case of GBP. 63.43 was the initial high and they formed 63.51 and holding above that. So here again they breached the high, but in the case of Euro they breached the high by about 3 pips, and in the case of GBP they breached the high about 7 pips. So slowly they have just gained the levels. Now current time is about 5:21. So around 5:20 they started breaching the high. Let us observe for 30 minutes. If they come below that of the initial high, then we understand it is a brief stop and then they wanted to slide. In case if they stay above that of the initial high for more than 30 minutes, that means we have to wait for another 1.5 hours to see that they stop cutting the high. That is known as extended move. And in case if they continue to gain the level, that implies that they are making an intentional move. That means they want to really gain the levels in the case of Euro and GBP. So this is how we try to identify the type of moves they are doing it and try to take our trading decision. In case if it becomes an extended move, immediately small rise we don't sell. We wait for the 2 hours and try to take a sell position in case the new high has not been breached and also the market comes below that of the initial high, so that we'll be able to easily keep stop at entry. So there is no guarantee it can go up to that of the low, but still we can keep limit as closer to that of the low and try to trail the stop which is kept at the entry in the sell position, and so that the market could either hit our stop or our limit. So that is how we take the chance. So even though the forecast or any type of analysis says that Euro could come down or go up, any type of trading we try to do it, we always keep in mind that the trading strategy alone can give us a chance to limit the risk and maximize the profit. So I again insist that the trading strategy is a must, whatever be the type of forecast we follow. And each and every one will try to use their own type of analysis. Some trade with a gut feeling, some trade with that of statistical analysis, some trade with that of the fundamental news. It can vary, depends upon the perceptions, it can vary, but ultimately the trading strategy of using a stop, a simple trading strategy using a stop so that we can accept that particular loss. And similarly, some trade with the risk reward ratio. Okay, if the risk is given, they accept it. And if the reward is given, they are glad about it. So that is how there should be a plan with regard to the trading. So we cannot blindly take a position just because I say that there will be a volatile move and that drop. So during the rise, we'll take a sell and later on ask me that whether Euro will come down or Euro will come down or Euro will come down or when it's going to come down. So I can only ask you to wait patiently. But beyond that, I will not be able to push the market. I can give tomorrow's forecast, day after tomorrow's forecast, next week forecast. But ultimately, the market has to respect it. So there is no guarantee the market can respect any type of forecast consistently. So that you have to keep it as a limitation for this particular type of analysis. Now in the case of CHF, they formed the low 0.8007 and that has not been breached, even though in the case of Euro and GBP they breached the high. They are not breached the low in the case of USD-CHF. They have done the extreme level and you find the quotes are now in black, that you don't find much of order pouring in. Then in the case of yen also, you find 77.91 has not been breached and the high is also not breached. Okay, the high is 68. I don't know whether I noted it wrongly or they really made a very quick move to 78.68. I have not observed it. Then in the case of Australian dollar, 1.0822 is the low and the high was 1.0917. They breached the high again here by 3 pips. And now Australian dollar quickly come below that of the high 1.0912 and 14 are the current levels. So they made a brief upward stop and come below that of the initial low. And we have the hypothesis that the commodity pairs lead the rally and lag behind. So today, if you have noticed that Australian dollar come up very quickly and it has formed the high after a zero in GBP, followed it, and now you find that Australian dollar breached the initial high and formed a new high about 3 pips, and that is 1.0920, and subsequently it has come below that. Let us see whether it is giving us any sort of insight that the currencies are going to drop it. So as per our theory, that when they cut the high and come below that in less than 30 minutes, they are supposed to move in the opposite direction. So let us make an observation, understand it. Now in the case of euro, they formed a further new high, 44.94. And GBP also, 63.55 has become the new high. So they cut the high again in 1.5 hours time. So because they started around, so no, it is more than 2.5 hours. So because they started this forming of the high around 3:15 GMT, and from there they started cutting it. It's more than 2 hours. Now they are continuously breaching the high. So it could be the possible intention move. But Australian dollar shows other way. So let us see which way the market is going to move. And it's last week of the month, so you'll come across more volatile moves to happen in the market. And still, we can use our market reading technique and also use the trading strategies simultaneously. Keep in mind that whatever we try to read the market, there is an element of error, and we cannot just like that take unlimited risk thinking that the limitation of error is very less. And you know, with regard to the probability theory, normally with regard to all the biological sciences, the error probability with regard to population study, etc., the permissible error is about 20%. So if there is an 80% probability, we say that our estimate is correct. With regard to human population estimate, or with regard to animal estimate, or plant estimate, etc. And coming to that other financial market or other scientific studies, 0.01% probability is considered as a reliable error factor, a lesser reliable error factor. So the 99.9% or 99.99% is considered as a safe probability level. But as far as financial market is concerned, it is a leverage trade. So we have to go for the precision of 0.00001 probability level. Only then the forecast can be 100% true. Otherwise, even 0.001 level of error can cause a very big loss for us, because we do a leverage trading. So it is not the question of the probability or not the question of our estimate whether it is true or not, and we are trying to explore all the possibilities to fine tune our market estimate and the market study, but still the chances of error occurring from time to time, we cannot prevent it. So let me minimize the PowerPoint presentation and Focus the camera over that of the live market code page. And answer to the questions which are asked here. In Francisco, do you see potency for GBP to spike up today or data release? Yeah, because it is the last week of the month, so they have got a great potency to make either way moves. So, especially you would have noticed during the last week of the month and the first week of the month, the market just go exactly opposite to the other forecast estimate sometimes. So this is one such occasion wherein you come across that, say they are showing a higher bid, now higher ask of 45.18. So they are checking whether stops are there above that. So they are quickly gaining the levels now. So they are very aggressive in hitting the stops, etc. It might be possible that yesterday a lot of people would have taken a risk reward ratio that keep a stop around 45.10, 45.20 and take sell around 43.80 and things like that. So they are trying to earn out of such trades. Then Arun, what is your outlook for Australian dollar doing? Now Australian dollar, see actually I was giving in the blog also, Australian dollar most likely to go below that of the parity from that of the multi-year high level. Multi-year high is around 1.10 level. And similarly in the case of USD CAD to go above that of the parity, it has not happened. So there could be so many reasons for it, I do not know. But that was the estimated forecast, and the forecast is been obliterated. So the forecast has not come true. That's what. So any scientific study, when you try to do it, we try to create a hypothesis, a null hypothesis, and try to prove whether the hypothesis is correct or null hypothesis is correct. Now, with that type of objective analysis, I made analysis and just estimated that because in the month of July, the market is expected to come to that of normalcy. So that is why I was telling that there is a great possibility that commodity pairs could go to that of the parity level, but they are exactly making the opposite moves. So that is what you find sometimes. So we have to accept it. And there is no question of justification on this error. So there should be a possibility. Probably in later months it could come. Normally you find the turnaround happens in the month of June, July, but it might be delayed also. I do not know this time when they intend to do it. And there is a scope again in the month of September. That's what I can tell you this. The forecast is based on the time frame mostly. In ASG, do you think that the players are working on predetermined levels? Absolutely no, sir. There is no predetermination of levels as far as the players are concerned. Why? Because by showing simply the levels, they are not going to gain anything. And nobody is going to reward them. Okay, I have shown euro around 1.4494. Give me the reward, or I have shown the euro 1.40, give me the reward. But market gives the reward in the form of distress trades. So basically, they look for such distress trades from that of the traders. So we know that they create the market sentiment and act against that of the traders from time to time. This time they are creating the bullish feel in the market. So we will watch and find out whether this particular bullish feel is they intend to sustain or they wanted to make a trick out of that. So they are not determining the levels, and depending upon the stops, so they checked it now, 45.18 they showed it. So they find it appears that they have seen stops. They will make an attempt, and also it has done about 119 pips. They got a potency to go up to 150 pips on the upside. So they can easily it just stops and come down later on. Then Matthew, what could be the possible moves of the forecast for another 3 days, Wednesday to Friday? See, normally you come across during that of the last week of the month, they bring in more volatile, more sudden jerk in the market. Suddenly dropping it, suddenly rising it, and they don't sustain near that low or high for a prolonged period. Now, as far as the forecast is concerned, they are expected to come. Yesterday they just gained the levels. Today they are expected to make some upward stop using the volatile move and started making the slide. And if they don't breach the high they form during that of the European session, during the US session, then there is a great potential for the market to come down tomorrow. And you will find tomorrow, day after, and Friday, the market could come down according to the forecast analysis. It can also go wrong. Always keep it in mind. They are all nothing but statistical derivations. Like in that chart study, using the moving averages and convergence and divergence, we try to find where exactly the resistance, where exactly the support. And similar study, you can always do that there could be an upside limit and a downside limit. Instead, I do that analysis incorporating the time also into consideration. Then try to see, okay, this time there is a possibility of a downward move. The next time there is a possibility of an upward move. So that is how my estimate goes or the analysis goes. So similar to that of the market breaching all the resistance and going up, they can also deviate from my analysis. That is market. Then Sundar, could you please repeat at what time does the initial high and the low set? Initial highs and the lows are set between 2:30 and 3:30 GMT, and you can note down the initial lows and the highs by 3:30 GMT, so that all will be set. Afterwards, if they breach, it is an upward move or a downward move. That is how we estimate it. In Matthew, it is advisable to buy here if euro has a technical trade. You are envisaging euro to go to, no, the 1.4570, it is been statistically estimated as the next resistance. That is what I am trying to tell you. And one can do a technical buy and sell trade because they breach the high and staying above their high for more than 30 minutes. Then probably one can, next dip you can take a buy, but keep a very tight stop below that of 44.85 in case if you want to capture that particular profit. And in the market, there are certain trades which are considered as high risk trades. So normally this is considered as a breakout trade. Many of the traders try these breakout trades. When the short sellers come for the short cover, they try to book profit. So that is a breakout trade. So in that breakout trade, if you are not having a quick witted condition, that is, if you are not smart enough to book profit, then we may end up in holding a higher level buy. So, sorry. Any breakout trade, try to see that you are using only the stop. M-drive. Euro net change is over 100 pips. So reversal will not happen. Yeah, normally above 75 pips, the reversal becomes very difficult. They may sustain the level. You are right. So if they do only up to 75 pips, then there is a possibility that they can reverse the market. But one condition now, this is the last week of the month. And also the market is expecting breakout news at any time from different countries. So it has become very fluid at the moment. So suddenly they can reverse the market. And there are occasions we have seen, especially during that of the last week of the month, they make about 200 pips rise and 200 pips drop on the single day. I have seen it, but now the volume has come down relatively. So there could be a potential of still a rise up to 150 pips and a drop of 150 pips. That is why we call the last week of the month, the volatility is going to be very big. And in normal circumstances, yes, above 75 pips, the reversal becomes unlikely. Then, Purnima, do you maintain a record of how many times algorithm has gone wrong? I am maintaining it. And I am trying to use it to improve the study. And that is how I brought in various changes with regard to the algorithmic study. You know, algorithm is nothing but a sequential statistical analysis. In the sequential statistical analysis, at different levels, we give different inputs. And we also try to take into consideration the constants. And those constants could continue to vary. Normally, the constants are not supposed to vary. That is why they are all constants. But the constants are nothing but the cumulative effect of the volume. So when there is a variation with regard to that, then we change the constants using certain other calculations and then try to incorporate it into the system. I am of the opinion that I can explain the entire process of the statistical calculation, but it may not be very relevant for a trader. Then Rama, how USD CAD will move in this process, in this month end? USD CAD has already come to that of 0.94 area, and it is showing only 34 pips negative net change when Australian dollar has gained about 67 pips positive net change. See, they had done a very quick move up to 44.99 and coming down in the case of euro, but whereas Australian dollar is moving ahead and 1.0923 they showed, and now they are showing 1.0911, 1.0915, below that of 1.0917, that was the initial high. So let us see whether it works, our study works. Then what is your today's forecast? I'll show the forecast slide again. Arun Kandial, do you expect there is a possibility to reach today's low in euro and GBP in Australian dollar tomorrow during the European session? Market is known to show such levels, and that is why, as a simple trading strategy, I recommend to small traders that near that of the high, if you take a sell position, keep about 50 to 75 pips limit. Don't take any more positions and just hold the trade as a very simple mechanism, because many traders avoid keeping stop, because I can insist to them to keep the stop, but it is their money. So obviously they will not keep the stop and lose the money. And in that scenario, they can simply keep a limit of 50 pips or 60 pips and just watch calmly when there is an adequate equity. If you have taken only 1% of the equity, the position, they cannot bring in the margin call. And in a day or two, you'll find the limit is filled. That is the advantage if you try to trade in euro or GBP. Other currencies, they make one-sided moves. Then this particular type of trade may not work there. So there is a likely chance according to the forecast algorithm. So, but still practically we have to see. Then Nitin, can you please show the expected market move slide? Yeah, I'll show that, please. So during the Japanese session, volatile move on the slide of the expected move. Now it's around 5:44 GMT. Let us see whether the last move was a stop, and if euro comes below that of 44.85, then it is a stop, and otherwise they want to make an intentional move in this particular session. Instead of a slide, they might firm up. That is how we have to see that the market has deviated from that of the forecast. Forecast is not a hard and fast rule. It is only an estimate or an expectation, and the market can go against it. So don't think that the market has to invariably obey the forecast. Then European session swing and slide, and US session also swing and slide moves are expected. Normally, during that of the last week of the month, you come across either way big moves in the market. So now they are on the upside making the moves. So let us see during that of the European session and the US session whether they are trying to bring in a downward move. So these are all the initial lows and the highs. You can just take a screenshot and probably refer it during the day how exactly they are handling these highs and the lows. So in Euro they breached the high, in GBP they breached the high and staying above, and in CHF they are not breached the high or the low, Yen also they are not breached the high or the low. Australian dollar they breached the high and they have come down below that, and normally it is expected to show the moves. And Canadian dollar they are not breached the higher. Canadian dollar low is breached by 2 pips, high is not breached. So I take this opportunity to thank FX Trade for all their efforts to bring me back here, and also you people who are also responsible for coming me back in FX Trade and try to give the forecast and also the guidance for you, and use it only as a guidance please, and do your own analysis and try to take your own trading decisions. So I'll come back again tomorrow and do yet another Asian session live market analysis, and meanwhile I'll post it in the blog also. Thank you one and all.